How are you doing? Welcome back to my diary. If you are new here, in this space, I talk about forex related stuff, the mistake I've made, and most important, the lesson that I keep making every day so that I can share with you. If you find this video very interesting, kindly hit that subscribe button, comment, tell me what you think about the video, and let's grow together. In today's video, if you've noticed, by the way, I keep on saying December is not that month to trade a lot. I did a video about a pair that I wanted you to look at, Eurocard, and you can see even now the market is not moving. But we'll get that one before the end of the video. So most of the time you'll find that you will waste a lot of time keeping on checking on the market, but at the end of the day, the market is not moving. So you don't have to force the market. If it's not moving, don't force it. Okay. So today I want us to look at 5 ways you can remain consistent during the whole of the year, because now we are coming to the end of the year, and I said I'll be doing some lessons like the things that I've learned along the way. And one of them, because I don't want to make the video too long, one of them, I've written them down so it will be easy for you to relate, or you can just tell me, have you come across this point? Do you understand? Have you experienced them? You can just tell me where your journey is. Then we can know how to go about it. Like, it is just good to share. Okay. So the first point, you have to identify your age, and in this pattern, in this case, you have to know your pattern. Okay, the first thing, let me be writing so that at least we can be on the same page. Uh, at least know your age, know what you are dealing with. Okay, and there are so many patterns that you can always try to look at. And I keep on saying, you don't have to have so many patterns. The first pattern that I love, you can always use, for example, if you're selling the market, let's say you want to sell the market, these are some of the confluence that they will make it easy for you. Make it easy for you when you want to enter the market. Selling patterns. Anytime you enter the market, you can always try and look at this pattern. Selling patterns. Have I written the name pattern well? I don't know if I've written the name pattern well. The first one, anytime you know this kind of pattern, there are so many, but I just want you to know like 2 or 3 of them. Okay. The first one, I keep on saying, a head and shoulder. Okay. Head, shoulder. That is one of the easiest pattern that you can master any day, anytime. Okay. If you want to sell the market. The second pattern that you can always love and try to always understand, we call it a double. We call it a double top. I keep on repeating this thing because I always believe we always have new people who are watching me each and every day. So it is always good at least to always have the basic of where we are coming from. And the third one, we can call it a consolidating or arranging channel. Those are the easiest that you can always master, and the moment you spot this kind of a pattern, it becomes easier. Okay, the moment you understand how to spot any pattern like this one, it now becomes easier, and you can always see these patterns happening time and time again. If you've been following me, I know by now you already know how I speak this language. Okay, so these are some of the easiest pattern that you can always look out whenever you want to sell the market. But now, if you want to buy the same market, these are the pattern that I want you to be looking at. Remember, if you're selling the market will always be at the resistance. That is where we want to sell the market. And if you want to buy the market, to buy the pattern that you are supposed to be looking at. Okay, they should be just be the opposite of what you are looking at. And the first one, it should be inverted. If you are selling using the head and shoulder, in this case it should be inverted head, shoulder. Just practice the opposite and it will save you along the way. The second one, it should be what? If you have a double top, then you should have a double a double bottom. That one is the easiest again to master, because the moment you know we have a double top is where we have two tops touching the same place, and then they start to sell. The double bottom will be the opposite. If you can't say the double top or the double bottom, just say M and W. Okay. And the last one, again, we have the ranging channel, because ranging can be on the upper side or on the lower side. Okay. It can be on the bullish side or on the bearish side. Ranging channel. If ever you just see any of this chart, any of this pattern, you're just good to go. You don't need extra, like you don't need to learn anything more. The moment you spot any of these, then you are good to go. And at the end of the day, always remember, an edge, it is something that gives you more confluence, that tells you this one is going to happen more than this way. Like for example, if you want to buy the market, then you have the reason. For example, if you want to buy the market and the market is already at support, already you have already done your top down analysis, the market is already at support, you can see this inverted head and shoulder. The market is giving you a bullish engulfing candle. The market is already bullish. Then you see you already have an edge. So the chances of you selling the market is less compared to the chances of you doing what? Of you buying the market. So the second one, let's go to the second point. The second point is that you have to filter out the noises. If there is one thing that I'll have to exercise in this case, filter out. Don't listen to what other people are saying. Concentrate. Always learn to concentrate on your setup. Concentrate on your strategy. Don't follow strategy. I'm writing them down. Concentrate on your strategy. Don't focus on what other people are saying. There are so many people who trade, like we have the ICT traders, which is not a bad thing. Then we have the smart money concept. We have other people who trade indicators indicators. There are so many people who trade indicators. There are others who trade the news. There are others who trade the technical analysis. At the end of the day, we have so many people who trade different type of setup. So it depends. Where do you want to concentrate? Do you want to be a news trader? Do you want to concentrate more on trading the news, which mostly happen on the first week of the month? Like the biggest news, they happen during the first week of the month. That we have the NFP, we have the CPIs. So do you really want to concentrate on that part, or do you want to concentrate on trading where we have, apart from the news, the market is still open? So you really have to choose. And at the end of the day, you will find that if you are moving from one setup, one strategy to another, one concept to another, you will find at the beginning it is easier. You feel like this is the best. Okay. After finding out that this is the best, as you go on, you come to realize at the end of the day it is still the same thing. Only that we are using different terms. And one of the things that it takes a lot of time for you to ever come in terms is whenever you want to whenever you are learning to trade, it is more like toxic. You keep on learning, you don't know how to filter out. So you find that you have learned so much that you don't even know how to unlearn. There are so many, you have a lot of information, but you don't even know how to practice the same information. So you have to come to conclusion. How do I stop learning a lot of things? How do I practice whatever I've been learning? How do I not follow so many people? Why? How do I not start doing so many things and practice whatever I've been learning? And the easiest way, if you have been learning more about ICT and you have a clear idea of how ICT works, just concentrate on ICT. Don't mix ICT. If you are good with indicators, just concentrate on that indicators, because at the end of the day, if for example you are all trading GBP USD and we all know it is going to buy, we are just going to buy at the end of the market. At the end of the day, if the market is buying, it is buying. It doesn't matter the strategy you are using. Only that the information that you have is what you use it to enter the market. Okay. So ensure this one, it makes a lot of people, especially even me, because I've tried to learn all this strategy, the indicators, the ICT, and by the time I came to conclusion, I don't need so many things. I only need to make my setup, my strategy as simple as possible. It saved me a lot, okay? But that is a story for another day. So my third point, you have to know every risk that you enter. Anytime you enter the market, don't be surprised when the market goes against you. For example, if you want to enter the market and your risk to reward ratio, like you are willing, let's say you are willing to lose here. Let me say here. Let's say you want to lose $1. You want to lose $1 here to make how many dollars? To make around, let's say, to make around $6, and the market starts to go against you. So by the time you are at already $2, don't be surprised, okay? You don't have to be surprised because you are the one who entered the market. And the moment you have already entered the market, so you don't have to be surprised, okay? If you have already entered the market, just know before even you place that entry, know your risk, know where you're heading to, know that the market can always go against you, know the market that at some point it will go down before it starts going up. So you have to be prepared. Don't be shocked like you have already entered the market and the market is going against you. Maybe you wanted your loss to be $3 and the market is already at past $3. What are you doing? You have to start with your risk. Enter the market knowing that in case the market goes against you, I'm willing to lose this amount of money to make this amount of money. You see the way you are happy whenever it goes to your TP. You should be the same case. Yes, I know you'll not be happy when you are losing, but at least don't be surprised because you already know. In case this one goes against me, this is how I'm going to handle. But don't let the trade go against you. Like for example, you want to lose $2 and you want to make $1. That is not making sense. It is either you lose the smallest to make the biggest, okay? So ensure that you always know your risk and you'll not be surprised, like you'll not have a hard time because you already know what you're getting yourself into. Another lesson that I've learned, I'm almost winding up. Another lesson that I've already learned, because these are the lessons that nobody teaches you, you will learn them along the way. Okay? So you have to know your strategy without fear. And this one, it goes back to number one. They have already said you have to identify your strategy. What are you trading? Are you using the simple concept or are you using the hard concept? You know, there are so many people who want to use the big names. Okay? There are different people who uses big names, but at the end of the day, we are all trading the same thing because if you are trading GBP it is not going to change. It will still remain the same thing. And in this case, if you are trading your strategy, you have to know all these things. Like we have something like supply and demand, and you'll see they are the same thing. Supply and demand, they all speak the same language. Only that we all don't understand. We have support and resistance. We also have something like the order blocks. You see people telling you I'm trading order blocks. These things I've come to realize at the end of the day, we are all speaking the same language. We have fair value gap. Fair value gap. If you don't know about the fair value gap, the ICT people they do understand value gap. ICT people they are very good with this kind of things, but at the end of the day, they do speak the same language. We have something like liqui, liquidity, liquidity, liquidity. I hope I've written the name well. By the end of the day, even if liquidity, even if you try to make it like you give these names, you give this this strategy or setup big name, they all speak the same language. For example, if you are trading supply and demand and you are using against support and resistance and you are waiting for an order block, they are the same language because if I'm supposed to be buying, then I'll have to wait for the market to go to the support. I'll have to wait for the market to be at demand. I'll be waiting for another blow. So they are still the same thing, only that we are using different concept, but we are trading the same case as the same thing. So at the end of the day, you realize even if you try to switch from this strategy to another, they are still speaking the same language. So you have to be sure which one am I comfortable, which one do I understand, which one do I see most of the time, which one keeps on repeating itself over and over again. Only then you can practice this, you can enter your strategy without fear. And sometimes, there are sometimes you can enter the first time, the market goes against you. You enter the second time, the market goes against you, and at that time you are filled with fear. Even if you see your setup is very clear, you are filled with fear, you don't know what to do. And that market that you fear entering the most, it is the market that will always go to your TP without any fear. That is why I keep on saying, ensure your losses are the smallest compared to your wins. Even if you lose $1, another $1, but the third trade you lose $1 and you can make $6. You see, you have already compensated the loss of that day, and that is how we continue with this life. Because at the end of the day, I keep on saying it is a business like any other. You'll encounter losses. There's no business that is 100%. At one point, you'll encounter losses. So you have to deal with your losses at every stage as it comes. But and as you go on, you realize, oh, I saw this thing happening again. I made a loss yesterday. I did not die. I was able to eat. I went and had a bath. I slept well, and today is another day. You see how this thing they keep on happening, unless you are trading a volatile pair. But if you are trading a simple pair and you are not trading during the news, you can always overcome this thing. But this thing they do take time, and you have to gain experience for you to understand what I'm trying to say. And the last thing, you are always analyze your trade afterwards. I've not written well, but my point was here, after you have already entered the market, okay, after you have already entered the market, come and backtest whatever you have done. Like, you have to backtest your setup each and every time. Backtest after trade. If you have already entered the market, you have already placed your TP, your stop loss, you have already analyzed the market, always come back and check the market. How did the market went? Did the market went to my TP? Yes. And if the market went to my TP, how long did it take for that market? Was there a lot of consolidation? Like there, you can say, was there a lot of consolidation? Was there a lot of consolidation? Was the market, did the market move fast? Was the market fast or slow? Did we have news during that time? Did we have news? Was there a good entry? Was it a good entry? A good entry? And how can I improve more? Because at the end of the day, there are certain pairs that will give you a perfect entry. At the next day, they're not giving you a perfect entry. So you have to be familiar with all this information that I've already given you. At the end of the day, if ever you have already entered the market and you have already closed the market, come and check if the entry that I entered with, did it have the same thing that I always use? Was this time round, was I given a very strong candle, a weak rejection candle? Did the market take long for you to complete where it was going, or the market, was it that slow? You have to have an understanding, and always backtest a market that you have already entered. Only then you will be responsible. Don't backtest a market that happened a long time ago. So that these are some of the lessons that I have been learning along the way. I know that they'll help you even as you go on. Okay, so I hope you've learned something and practice this thing and they'll make sense. Okay, until next time, bye bye.